Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. Euro-dollar, a bullish open and close white Mariposa yesterday, as well as a second bullish white soldier and new high and high close for 2024. This after the previous session's immediate countering bullish open and close white Mariposa. Prices shot past the old target X at 110.40, closing well over the purple middle time, currently at 110.40 also, of the purple late June to start of August bullish Andrews pitchfork, as well as a second consecutive close over the very important dark blue July 2017 to November 2018 head and shoulders neckline, currently at 109.94. This move higher resolved the one question I'd left in my mind from last week. Was the action from March to date a possible double bottom? The answer is yes. Thus we had a primary target in the 110.90 area, which is not, we've just about reached already, and a secondary hard reach target X2 up in the 111.90 area. This secondary target required prices to exceed the December 2023 high and rise up to highs not seen since July 2023. So far today, a new high, but only by one tick, and a pullback lower, but not by much. We are actually in open territory up until the December 2023 high at 111.39. My only concern is that prices might make a tweezer top right now. Cable, aka sterling against the US dollar. A bullish opening white Mariposa and third bullish white soldier yesterday after the previous session's impressive bullish open and close long white Mariposa. Prices rose up and approached a dark blue middle time, currently at 130.32, the bullish Andrews pitchfork for the late June, early August move, though did not test it. Overhead, we next have the July high at 130.44 and then little until the December 2020 low at 131.33. So far today, a tiny bit higher, but indecisive, looking like an indecisive doji cross at the moment at these levels. Euro sterling. A reactionary bullish Harami and bullish closing white Mariposa yesterday after the previous session's second bearish black crow. Prices punched back up and closed over the bright red neckline, currently at 85.24, the May to August 2022 head and shoulders continuation pattern, using the roughly flatlining medium moving average, currently at 85.08. And I suppose also the very recent 50% Fibonacci line, a little below 85.03 as a base. Below this 50% Fibonacci line, we have some clean air down towards the lesser Fibonacci line for the same very recent move at 84.74 and the April 2021 low at 84.70. Meanwhile, top side, we have a triple combination coming up of the December 2022 and December 23 lows 85.75 and 85.45 and 85.47 respectively, plus the declining long moving average, which is currently 85.47 as well. Now I said last week how on the contrary side, actually let me just check that one, yeah, 85.47, how on the contrary side of the recent declines, we might have the possibility of the late July to date action becoming a possible very large bull flag. Well, this seemed very remote until yesterday's action. Now it is still remote, just not very remote right now. So far today, a small exploitation upwards over the lesser Fibonacci line at 85.31, but then a pullback down to the bright red neckline. US dollar against the Japanese yen. A second bearish black crow yesterday and a suitable follow-on lower to the previous session's immediate countering bearish harami. Prices pushed below the lesser Fibonacci line at 146.69, but only managed to just close below it, despite a significant drop down towards the next support, and that's the 50% Fibonacci line, the January 2023 to January 2024 move at 144.58. I'd recently been wondering if the action over the last 2 weeks or so might be an ascending wedge pattern. Well, the action yesterday dispelled my concerns somewhat. Over all of this is the shadow of last month's key reversal down. So far today, an expansion above and below yesterday's close, but prices pulling in from both directions and looking like an indecisive spinning top, verging on a doji cross right now. US dollar against the CNH, the offshore Chinese yuan. A bearish long black Mariposa yesterday and a second bearish black crow after the previous session's bearish dark cloud cover pattern and bearish closing black Mariposa. This further counters the build-up seen over the middle of last week of a 3-day bullish morning doji star pattern. Prices were capped somewhat by the very recent Fibonacci line at 716.95, but did not really approach the next support below, however limited it might be, of the lesser Fibonacci line at 711.61. I doubt if this is really robust as a level. I think you would have to look at the low at 708.22 if this market really starts moving lower. 2 further points. I've been wondering recently if the action over August was building to become either an ascending triangle or a bearish halfway hesitation. Well, yesterday's actions allayed the idea at least for the ascending triangle, but it conversely supported the idea of a bearish halfway hesitation. So we will see. All of this is in the shadow of last month's monthly key reversal down. So far today, a dip lower, approaching but not testing the lesser Fibonacci line at 711.61 before pulling back up. US dollar against the Mexican peso. A very interesting pattern yesterday. An inverted hammer pattern and bullish engulfing pattern after the previous session's doji cross, but one that very nearly also became a key reversal up. It very much looks like, as I said yesterday, and I quote, "It seems the market has broken out of its previous, if short-term, imprisonment between the combined overhead resistances from the March 2020 low at 1915.03 and the 50% Fibonacci line of the November 2020 to April 2024 move at 1920.38, and below by congestion at 1885.40 and 1879.15, only to find another, this time between the now overhead congestion 1885.40 and 1879.15 and the congestion at the lesser Fibonacci line at 1859.72, though I would extend this down to the congestion between 1850.81 to 1851.71 that has the February 2020 low at 1850.81. End of quote. In the overall picture, we remain within the bright red mid-May to mid-July bullish shift picture. We're now in between the overhead middle time, currently at 1936.77, and the lower time below, currently at 1835.52. Additionally, the short medium moving average, currently at 1839.30, is nearby just above the lower time. So far today, a higher open and a small move higher, but not much since then. The market is still well within yesterday's range. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.